Good evening and welcome to my end of the week review here for the S&P 500 and plan ahead for next week. Just like with Apple, I have a lot of old notes on here and I'll go through this just like I'm starting out for the week. Have been out on vacation, so please bear with me and hopefully we can get this ball rolling, start making some good trades again. I have taken a few positions in the S&P 500. The only one that I have alerted as far as the trade crew chat room, I was two trades actually. I had 285 weekly calls here off of the 21 EMA at 29. The majority of those I sold at 58. Just wanted a quick 100% gain overnight hold. Worked out extremely well. Held on to a very small portion of that, expecting further upward move uh, into the next day. However, as you can see, it gapped down. Also, here on the 14th, I took some 284 calls. I was maybe pressing my luck a little bit too much, looking for another upward move after that kind of climb off the 21, reclaiming the 8, and looked like it was going to gap back up and take this gap up here. Well, that didn't happen. These actually gapped down, and at one point I think they were down to like 20 cents. So it was a very small position on this play, so I just kind of left it and let it ride. I chalked it up as basically going to be a complete loss. However, here on Thursday, I did manage to get out at 112, so for a small gain on those. The last position that I had for these 285 calls, I did trail out here at 34. It was a very cheap play. Just kind of being greedy is more fun than anything else, which is not the best way to trade, but it is what it is. Don't This is one of those things. Do as I say, not as I preach. So don't hold those kinds of plays for long because they can go to zero very quickly. Anyways, the S&P 500 here on the daily time frame, W pattern is still valid, holding very nicely to the highs. Stopped in the trade crew chat room last week and said we've now put in another higher low in this region here, which is what caused, or not what caused, but the next day we ended up having a gap down, still another higher low. If you're trying to pick tops in the S&P 500, that's perfectly fine, but you have to keep in mind your stop has to be somewhere. So if you're shorting a move like this, where's your stop loss going to be? Currently, there's going to be stops right here above this 286.10. Market makers are going to see that, algos are going to see that, and they're going to run for that. They're going to try and take that out. That's extra liquidity for them to go ahead and buy shares. And the next stop is going to be this 286.60. So it's a perfectly legitimate place right here to take a trade as far as a short position, but don't marry that position because it could hurt you very quickly. And I would never be bearish on the S&P 500. Anyways, going forward here onto my trade plan, my notes, just like with Apple, are still way back here. A couple of notes that are still on here I'm going to remove from the chart. Just zoom this over a little bit. No longer need this line. Price actions come up, broken through it, and put in higher lows off of it. So let me get that out of the way. Remove some of these lines. It's just a lot of clutter on the chart right now. Just like with Apple, there was a bottoming pattern here with a measure move up to about 279-ish. Hit very nicely. So let me get that done, or get that off there because it is done. There we go. Consolidation area has now completed. Another flag target has completed as well. All right. And just like with Apple, quick recap on these notes. As you can see, this trade right here in 282 calls would have failed. Came down here and tested near the 21 EMA for 280 calls. Would have worked out extremely well on a double bottom. Similar play would have been over here at the same level. If you follow any of my videos, these lines are always on the chart. These are always my predetermined levels of taking a position and looking for a move higher. You can call me a perma bull, it's fine with me, but with the S&P 500, there's no reason to be bearish in my opinion. Now move some of these levels over, and I will change them momentarily to the call options that I will be looking at. Okay, so this blue line, 8 EMA, as always, I'm actually going to be looking at 284 calls right here with about, I'm going to go 2 weeks in the future. So we're getting kind of close to what should be a significant resistance. If I go a little bit closer, shorter in time, I'm not as tempted to try and hold them as longer. I will most likely lock in profits and take what's there on the table instead of being a little bit too greedy. Whoops. Now the 21 EMA, this yellow line, I'm also going to be looking at about 282 calls. Again, same reason, going 2 weeks in the future. And this is already held as support, and as you can see, if I would have been available and marking these trade notes on my plans, I would have been looking for around 280, 280 and a half calls right in that region as well. But as is the case, I was not trading, or at least not actively trading, so I missed that opportunity there. The 50 SMA way down here around 279. I will look for 280 calls with about, actually I'm going to leave that 4 weeks out in the future, because if it pulls down here, we're far enough away from this resistance zone that I can comfortably hold for a little bit longer. And as you can see, we're putting in higher lows, higher lows, higher lows, and the 50 SMA is actually coming up to be, it will be higher than this previous dip, probably up to here by the time price action even tries to test that level. There are a lot of gaps for the S&P 500. Does not really concern me. I just look at them as an abundance of either buying pressure or selling pressure, and will likely continue to move in the direction of that gap if they do test it. What do I mean by that is if price action comes down here and tries to fill this gap, since it was a push up, there was an abundance of buying pressure. There's most likely going to be support there. So I'm going to know that they're there, but they're not overly concerning to me. Anyways, these are the levels that I'm going to be looking at trading. If price action does come down to this green line again, zoom back out here one more time, around 280 and a half roughly, which is just this green line over here. I'm probably going to be willing to take some 280 calls as well. So in this region, I will look to build. So that 4 weeks in the future, basically have about $1.50 of risk for those options. I have no problem building into a position that does come down, pull down, maybe a false breakdown below the 50 SMA, and then a rally back up through it. It looks like the S&P is ready to pull back a little bit, at least on an hourly basis here, as far as this last candle. But again, there's plenty of supports down here below, and I will look for call options at those levels. Overall measured move price target that I'm looking at is up here around this 292 and a half, 294 area. I did get into some 300 calls for October, still holding next June 325 calls. The remainder of my August 295s expired worthless, and I do have quite a few other positions for the S&P 500 calls, just too many to really go through at the moment. For now, these are new positions I'm looking at taking. If you have any questions or comments, please feel free to leave them down below. Come join us over the Trade Crew chat room. It is free. You can follow along with some of these trades and profit along with us. Have a good weekend and good luck.